Well, welcome everybody. Joel Penhorwood here for Ohio AgNet and Ohio's Country Journal. A pleasure to be joining you here on Friday afternoon after a big USDA report day, and even a greater pleasure to be joined by the one and only Doug Tenney of Leist Mercantile. Doug, thank you so much for being here with us today. What a nice thing to be able to recap USDA report day, one of the biggest of the year, truly, here on January 10th. And being able to do that, not only diving a little bit more deeper into the numbers, but also some of the pre-report expectations and how those maybe kind of blew it out of the water a bit today. And we'll talk more about that. Before we get there, though, let's go ahead and first cover what we're talking about. Today's reports included the World Ag Supply and Demand Estimates. That provides comprehensive forecasts on global and U.S. supply and demand for major crops and livestock. Monthly things that we're bringing to you there. Crop production annual summary, final estimates on the 2024 harvest, detailed production levels for various crops. The grain stocks report, the current inventory levels of grains indicating available supply. Also, we talk some winter wheat seedings numbers, data on the acreage planted for winter wheat and canola as well, offering insights into future production. Lots of reports to cover. And before we jump into analysis of that, let's take a look at how markets responded. Again, now reports were released at noon Eastern time for most of those numbers. March corn ended up the day here at the close, $4.70.5 per bushel, a gain of 14.5 cents. May corn feeling bullish as well, up 15 cents to 4.79.5. December new crop corn up 3.25 to 4.50 per bushel. On the soybean side, some nice gains there. March up 26.25 to 10.25. May soybeans 10.38 per bushel, up 27.25, and new crop soybeans for 2025 up 17.25 to 10.31. On the wheat side, March down 3.25 to 5.30 3/4, but July 5.54.5 down half a cent. And as we take a look at those numbers, Doug, nice to see on the corn and soybean side a bullish day. I turn it over to you. What are your thoughts on today's reports?
Well, I guess it's what they call a surprise, Joel, because certainly was a surprise as we look at the numbers. We thought that we would see corn and soybean yields reduced. It was a rarity in November, if you will, that we saw the bean yield and the corn yield reduced. We felt pretty comfortable that we would see yields reduced. I mean, huge surprise in terms of seeing the bean yield down another bushel per acre. We saw the corn yield down almost 4 bushels per acre, 3.8, I guess, how you want to round it. But that was a huge surprise, production down. The market certainly was a surprise here today. And you love the January reports because at times it's, either you're a hero or you're a goat in terms of your market perspective and how things look. But certainly was a surprise today to see corn up 14 cents. I think producers have to reward this market with selling some bushels. We're seeing different advisors being anywhere from 70 to some move to 100% sold today. But I think this is a market you have to reward. And we do have to remember that actually you grow it and then you got to sell it. So I think today is a perfect opportunity to here this afternoon to even call some of your merchandisers if they're not in, talk to them Sunday night or Monday morning and take advantage of this because to me, this is a rally that I think you've got to sell into in terms of the market perspective. Is it something that we're going to add additional dimes to in terms of corn? I don't see that. Could we see more dimes and beans? I think that's going to be difficult to see. I thought all along that the December new crop corn at 450 was a place, if you haven't got started, to start. I know people are anxious to get 450 flat price for fall corn, and I don't see that happening. It's got to be some kind of weather event, a combination of a demand event taking place. Beans, we saw November beans several months ago up to the $11 mark on November. I don't see that taking place again. I think with today's highs being at 1039, that could well be the highs for several weeks, maybe several months. So I think the perspective that you have to look at in this market when we're not in a truly bullish market, at least until today, I think you have to look at it as a market that's going to chop back and forth. We thought all along that we were going to see this chop back and forth, and it's a market that you've got to be willing to sell and not look at it in terms of the rally that you had today that all of a sudden that's a building block for putting quarters and quarters on beans. I don't see that. I don't see that happening at this point in time, Joel.
But rather a peak that we really need to take advantage of, it sounds like, at least for this small foreseeable future. Let's put things a little bit into perspective. Going into the report, what were some of those pre-report expectations? That what were analysts expecting, Doug?
I mean, people were expecting that we'd see the bean yield down, I think maybe a half bushel per acre, but to see it down to a bushel per acre. And I think the corn would have been that we could see corn down, a bushel and a half, but to see the corn yield start with a 179, I think that's it's like, whoa. I think we blew people out of the water. And I think that's why you're seeing nearby corn up 14 cents and new corn all the way up 3 from the perspective of fantastic or good demand nearby for corn. We know that there's a lot of corn in the bins that people want to be moving. I think as we look at corn and producers and holding corn, I think last year proved to numerous people that reluctantly held corn past April 1 or beginning of planting season, that normally weren't comfortable with holding corn in the summer. I think they're going to say, hey, it didn't work last time. I ain't doing that again.
Mm-hmm. I think of so many conversations we had with folks that stopped by our booth at Farm Science Review, and they were just talking about how much they were still carrying, and it happens to you. Hopefully it doesn't happen majority of years, but they were really wishing that they hadn't waited. Let's just say that. So an interesting time, but man, quite a bullish change. And so you're saying farmers take advantage of this?
I think you got to take advantage of it. Do I see $5 December corn? I don't see that. So I think you got to look at it from the fact it's a gift. We got a gift today, and you reward gifts. And if you want to look a gift horse in the mouth and give them an apple and say thank you.
This 3.8 bushel change down for corn, notable. Where did those bushels go? Why was USDA? Why the adjustment so?
Well, I knew this question was going to come up, Joel, because I felt that we would see some big changes from the November numbers when we saw numerous states, including Ohio, Indiana, Illinois, Iowa, all go down. But when you look at the reductions that you saw from last report, Ohio last month or in November was 185. Today they came out at 177, 8 bushels. So Illinois 218, 217, down just a bushel. Iowa 213, now 211. I think the biggest surprise, and all along people thought that we had fantastic corn yields, particularly in the West. But when you look at the numbers that I see, one thing stands out in particular in Nebraska, and one of the top 3 or 4 states in terms of corn production in the entire U.S. And you saw the yield go from 194. It's not even in the 190s anymore. It's down to 182. So I think, to me, that was a big surprise, and that compares to last year at 188. So you had Illinois above last year. You had Iowa above last year. Obviously, Ohio was below last year. Last year, Ohio's corn was 198, and this year it was 177. I don't think that's any big surprise. We obviously here in Ohio saw some really bad pockets here in Pickaway County. Some stuff that was below 100 bushels, and it's like the double whammy happened this year for those guys, because not only did the low yields get you, but the low prices. And obviously the low prices happened. Why? Because we had fantastic yields out west, and I think those guys are happy with what they saw on production and what that yield was. And I think that's why we're going to see some additional acres. Some people are talking 1 to 2 million more corn acres going in this year, because hey, they're remembering what happened last year, and they had, for the most part, they had fantastic yields. So what do you do when you have something fantastic? You repeat the story. So I think the board points to it with new crop corn only up 3 cents, the nearby up 14 to 15 cents. We've got corn demand nearby, but we've got some issues in terms of what those acres are going to be, and obviously the market showed that here today. So I know numerous people were looking at selling if we got a rally, and I think this day just points out to that if there's a number that you like in the market, it doesn't matter what the number is. Pick the number. If you think it's stupid, don't be afraid to put it in, because the guys here today that had corn orders in at 1038, for example, in November. The high of the day was 1039.5, and that was up in the mid 20 cents. Likewise, you had March beans today, 1025 on the close, up 26, 1033 on the high. So you're up another 7 cents, 8 cents on beans. So something is unrealistic to everyone's mind. So the worst thing that could happen would be that you have a number in mind, but you didn't give it to anybody. And then you look at the closes and you look at the closes and say, darn, I could have had that number. So that's, I think that's important to look at as we're marketing grain. We have to remember that we grow it to sell it and take advantage of what the market gives to us.
Hindsight is 2020. Do we see resets on Monday at all? What do you think?
I think we're going to see things back and forth. I really think, beans tried to fall back off after making those highs on the Novembers at 1039. We got down to 1020 to 1022. We saw the board close at 1020 or 1031. So I think we're going to be back and forth. Do we take out the highs of today next week? I question if we see that take place.
Any other numbers that stand out from today's reports? Again, a notable number of reports, including some more insights from what's happening down in South America as the Brazilian harvest starts to get underway, or at least a little bit closer to some numbers that we can take to the bank. So any thoughts there?
Well, there was no changes in South America, and we felt that was totally expected because we see it's common that we would see some weather problems in Argentina, but Brazil ends up having a good crop, and maybe people didn't like it in the column. I just came out here in the last few days and I called that rally around Christmas time a bogus rally. But you saw that week, you saw beans up like 20 cents, and 2 and 3 days later you're down 18 to 20 cents. So when we look at South America and pinning our hopes on seeing quarters and quarters higher and from problems in South America, what gets lost is that Argentina, yes, they're having weather problems, but when you do the ratio of bean production in Brazil to Argentina, it's like 3 point something plus bigger than Argentina. So unless there's not a huge problem in Brazil, you're not going to see the quarters and quarters higher take place from Argentina. Now, it's obviously makes for nice headlines, and you're going to see the algorithm guys trading the headlines. I think the big thing is going to be in terms of your question about will we see this repeated on next week on Monday, for example. What do we do Sunday night? And oftentimes what we see in the night session is that we're in a sideways market that's chopping back and forth, that you often see, one, not as many traders in the market, but secondly, the highs take place in the night session, and you have difficulty even getting close to that number when you reopen at 9:30 Eastern time here in Ohio. So I think it's important to obviously look at the night session. I've been one that's always thought that the night session was there. It's to take advantage of, but you don't see the big volume taking place. Right. And as I understand it, you do not see the big guys really in that are like the day traders, for example, that they really want to be in that because they're concerned about volume and whipsawing. And you can see how this market can whipsaw, 10 to 20 cents on beans and 5 to 8 cents on corn on almost no news. I mean, at times you sit there and look at the board and you go, what happened? And it's just, you don't know. It's the market. It's the market.
Yeah, and if only we knew what would happen tomorrow, right?
I wouldn't be sitting here. I'd be sitting on the beach somewhere.
Wouldn't mind joining, especially with the snow heading our way. Holy cow.
Yeah, haven't you always heard, that's been something you always heard, but I mean, that's what makes the world go round is the markets change and different news becomes a factor, and one day it's a factor and the next day it's not. So I think that's something that as producers, you can get hung up with the fundamentals and so forth, but the fundamentals oftentimes will oftentimes mirror chart points in terms of chart activity that takes place, but the reality of getting to those numbers can sometimes be a fundamental event, like today, for example.
Right. Now, if you listening want to dive a little bit deeper into the markets and the analysis that Doug has gone into, we got a nice right after the reports came out. Analysis from Doug Tenney of Leist Mercantile online at ohioagnet.com. You can go visit us there. There's a wide variety of topics that I'm sure we'll be diving into in a number of market analysis moments in the coming days. Partially another headline grabber will be that of China demand changing. Doug, any thoughts on that for soybeans? An interesting move.
Interesting move. I think what we have to remember is what happens on January 20th, and it's the inauguration of President Trump, and he's been, telegraphing, however you want to say the words, the tariffs are going to go in place, and that's obviously going to hurt our soybean demand to China. And tariffs, in my mind, I think I wrote about it a couple columns back, that tariffs don't work. And I've tried not to be political at times, but I thought that was one that I just had to make a, I guess, just put some stuff out there. But I think China is going to continue to be in the market. But here's another thing that I think it's getting lost, is that China's import demand for beans is, according to USDA, is 109 million tons, up from the low 100s, 101, 102 a year ago. But the reality is, when you look at the vessel lineups and you look at some private estimates of what's going to get imported, one, the numbers aren't there in terms of vessels compared to a year ago. The vessel numbers are down, both from the US and from Brazil. I really think that number is going to be, in time, March to May, I would think that number could be down to 102 million tons. I would not be surprised at all that we've obviously seen the high of 109 and the number comes down. With what we see and other people see and thoughts and the reality of vessel lineups, to me, the 109 isn't going to happen. And I think as producers, we've got to look at what makes sense, what are people talking about, what fundamental points. There's sometimes a fundamental point that you think is important can be nothing in the market, if you will.
Lots of things to consider, and do keep in mind the only thing guaranteed not to change is that things will change. Right?
Well, we've seen that here for sure this year. Thank you, Joel. Thank you.
Absolutely. Doug Tenney, Leist Mercantile, joining us here on the Ohio AgNet, giving you a post-report day analysis. Talking about here on January 10th, all the things that have come out from USDA, quite a bit to process, but ended up being a bullish one for corn and soybeans. And Doug Tenney, Doug, thanks so much for being here with us today.
Thanks so much for the opportunity, Joel. Thank you.